7:14 a.m. Monday. You reach for your phone before your feet hit the floor, which is what you always do, and you open your banking app the way most people open their messages, casually, automatically, because there's no reason not to. Your balance looks fine. You get dressed. You drop the kids at school, or you walk to the train, or you stop at the gas station on the corner of your street, the one you've been using for 3 years, and you slide your debit card into the reader the way you've done 1,000 times. You punch in your PIN, you hear the machine thinking, and then a message appears on that little screen that you have never, not once in your adult life, expected to see. Declined. You look at it for a second. You think it's a mistake, you try again. Declined, you check your phone. Your balance is still there, everything looks completely normal, and yet your card doesn't work. You pay with cash this time, assuming you have it, and you drive to work telling yourself it's probably just a technical glitch. It'll sort itself out by lunch. Here's what this video will prove to you, with evidence, with history, and with a level of detail that most people are never told. It doesn't always sort itself out. And the hours between that first decline and the moment you understand what is actually happening can cost you more than money. They can cost you your stability, your plan, and every assumption you've ever made about how your finances are supposed to work. Let us talk about what you actually know about your debit card and what it means when it stops working. Most people, smart, financially aware people like you, believe that a declined card means one of two things. Either there's no money in the account, or there's a fraud block. Those are the only two explanations that feel reasonable, and because both of those feel like solvable problems, most people don't panic when it first happens. But here's what the history of payment system failures, banking crises, and financial infrastructure breakdowns tells us with uncomfortable clarity. The assumption that the card will work tomorrow because it worked yesterday is not a guarantee. It is a habit, and habits are not contracts. March 16, 2013, the island of Cyprus. A country of roughly 1.1 million people woke up that morning and found that their bank accounts had been frozen. Not hacked, not emptied. Frozen by the government itself. The banks were in crisis. The European Union had demanded a bailout condition that no one had publicly announced. And overnight, savers with deposits over $100,000 had 47.5% of their money seized. Not borrowed, seized. People stood in lines outside ATMs that were dispensing nothing. Business owners couldn't pay staff. Families couldn't buy groceries. And the most disturbing part was not the amount taken. It was the 72 hours before anyone explained what was happening. 72 hours where the card just didn't work, the cash wasn't coming out, and the official response was silence. Cyprus wasn't a third world economy. It was a European Union member state. Educated people, functioning middle class, savings accounts that had taken years to build. Gone, not because of their decisions, because of a decision made in rooms they were never invited into. That is the first thing you need to understand. This isn't a story that only happens somewhere else. Back to your Monday. It's 11 a.m. now. You've tried your card twice more, once at a coffee shop and once at a pharmacy. Declined both times. You call the number on the back of your card. You wait. The hold music plays for 12 minutes, and then a voice tells you that call volumes are higher than usual and to please try again later. You hang up. You check the bank's website. There's nothing. No outage notice, no alert, no explanation. You check your app again. The afternoon of day one is where the secondary problems appear, the ones nobody thinks about in advance. Your landlord has an automatic rent payment set to process today. You don't think about it in the moment, but it's running in the background. So is your phone bill. So is your Netflix, your insurance auto pay, the gym membership you keep meaning to cancel. All of these are quietly trying to pull from the same account your debit card is failing on. Some of them will bounce. Some of them will trigger overdraft fees. Some of them, like your insurance, will trigger a grace period clock that started running today whether you knew it or not. You haven't eaten since breakfast, and you're doing math in your head at your desk. $27, dinner tonight, transit tomorrow. What do I actually need in the next 24 hours? You text your partner or a friend, casually at first, half joking, "Weird, my card's been declined everywhere today." They respond, "Mine too." And that's when something shifts. And I mean, because my card isn't working is a personal problem. My card and your card is a pattern. By 5 p.m., you start checking social media. And there it is. Not headlines, not breaking news, just hundreds of regular people posting the same thing. Declined at Target, declined at the gas pump, declined at McDonald's. The bank's Twitter account has posted a single vague sentence. We are aware of an issue affecting some customers and are working to resolve it. Some customers? That's the language of managed information. It means the problem is bigger than what they're telling you. You drive home on fumes because the gas station won't take your card and you don't want to spend your $27 on fuel. You eat whatever's in the house. You put the kids to bed. And you sit down at 9 p.m. with your phone and your laptop and you start reading. By 9:45 p.m., you have confirmed two things. First, the issue is systemic, not personal. Second, nobody knows when it will be fixed. You go to sleep with $27 in your wallet and an account balance you can see but cannot touch. And here's where it gets worse. Day 3, it's still not fixed. Or it was partially fixed and then broke again. Which is actually what happens in real system failures more often than full outages. Because partial restorations create the illusion of resolution without the reality of it. You've been living on cash, borrowed from a family member, scraped from a jar in the kitchen, counted out in the parking lot like you haven't done since college. And here's what day 3 reveals that day 1 did not. You are not the only one running out of options. The businesses around you are running out too. The small restaurant 2 blocks away that operates on thin margins and needs daily deposit access to pay its supplier, their card system is down too. The woman who runs the nail salon has been turning away customers because her point of sale terminal won't process. The guy who drives for a rideshare app can't access the earnings in his digital wallet. The informal economy, the one that keeps your neighborhood running, is freezing in ways that don't show up in any official statistic yet. Here's a number that will restructure the way you think about this. According to the Federal Reserve's own research, 58% of American adults say that if they faced a $400 emergency expense, they would struggle to cover it. Not a banking outage, just $400. Now you're on day 3 of a payment system failure and you're starting to understand that number viscerally from the inside. Argentina, 2001. When the peso collapsed and the government froze bank accounts in what they called the corralito, the little corral, a diminutive name for a catastrophic policy. Argentinians went overnight from a functioning middle class to people breaking furniture to burn for heat, trading shoes for food, and lining up outside banks that would never fully reopen. Savings that took 20 years to accumulate were wiped out or made inaccessible within 96 hours. What did people wish they had done differently? Every single account from that period says the same thing. Cash. Not gold, not crypto, not stocks. Cash, small bills, in a physical location that didn't require a PIN or a network connection or a functioning payment processor. By day 3, you're calling your bank every few hours. You have now been told by 3 different representatives that the issue is being escalated and that you should check back. You have no timeline, no guarantee, no escalation path, and something you weren't expecting has happened. Your credit card, the one you rarely use, the one you keep for emergencies, is also being declined at 2 out of 3 retailers because it's issued by the same parent company as your debit card and runs on the same compromised network. You didn't know that. Most people don't know that. Most people assume that debit and credit are separate safety nets. They are, in theory. In practice, they often aren't. What nobody told you is what you're about to find out next. By the end of week 1, the picture looks like this. The bank has issued a public statement saying services have been substantially restored. Which means some things work some of the time for some customers. Your debit card works at larger retailers now, but still fails at smaller merchants and online payment systems. Your auto payments that bounced have generated $140 in overdraft fees. Fees your bank is not automatically waiving. Fees you have to call and fight to remove one by one in 30-minute hold sessions. Your landlord received your rent 4 days late and sent you an email reminding you of the lease terms. Your car insurance had a 24-hour lapse. You didn't know that. You found out when you called to ask 24 hours. Enough to void a claim if something had happened on day 3. These are the cascading effects that never show up in the financial news coverage of an outage. The news reports services restored. The news doesn't report the $140 in fees, the insurance lapse, the late rent notation, the hours you spent on hold, the cash you had to borrow and haven't paid back yet. And here is the pattern. Interrupt, the piece of information that will change how you see the next 5 years of your financial life. The number of major bank IT outages in the United States has increased by 70% in the last 10 years. This is not because banks are getting less competent. It is because the infrastructure running your money is older than your smartphone, held together by software written in COBOL, a programming language from 1959, and maintained by a shrinking workforce that understands the legacy systems those banks cannot afford to fully replace. The Federal Reserve has documented this. Regulators have warned about it in writing, publicly, in reports that nobody reads. Your money sits on top of infrastructure older than the internet, and the number of people who know how to fix it when it breaks is getting smaller every year. Week 2. You're more careful now. You withdraw a little cash every time you're near an ATM and things are working. You've started mentally categorizing your expenses differently. Things you can defer, things you absolutely cannot, things you can pay in cash. You've started noticing which businesses in your area accept cash and which ones are entirely card dependent. You've started noticing which friends have emergency cash on hand and which ones were in exactly your position during that first week. And here's who survived day 1 through day 7 with the least damage. Not the wealthiest people in your life, but the most prepared ones. The person who kept $500 in cash at home. Not because they were paranoid, but because someone had taught them that redundancy matters. The person who used 2 different banks with 2 different networks, so when one failed, the other still worked. The person who had their utilities, rent, and insurance on a calendar alert rather than autopay, so they could manually process or pause if something went wrong. These are not complex strategies. They don't require significant wealth. They require a single afternoon of reorganization and a decision to stop assuming the infrastructure will always hold. In Weimar Germany in 1923, hyperinflation moved so fast that workers demanded to be paid twice a day, so they could spend their wages before the afternoon's inflation erased the morning's purchasing power. Wheelbarrows full of cash to buy a loaf of bread. You've seen the photos. That is what happens at one extreme. But you don't need hyperinflation for your system to break. You don't need a war or a collapse or a government seizure. You need one legacy banking system failure on a Monday morning to turn $2,400 in a digital account into $27 in your wallet. The gap between stability and vulnerability is a 6-hour outage. Most people don't believe that until they experience it. Here's the answer to the question that has been sitting at the center of this entire story. Since you stood at that gas station at 7:14 a.m. and watched your card get declined for the first time, the question you've been turning over since then is not what's wrong with the system. The question is, why didn't I know? Why, in a country with the most sophisticated financial infrastructure in human history, did no one ever sit you down and explain that the payment system you use 15 times a day has single points of failure, that your debit and credit cards may share a network, that your auto payments run whether your account is accessible or not, that a 24-hour insurance lapse is a real and silent risk, that the software holding your money together was written before most of your parents were born? The answer is not that this information is hidden. It's freely available, it's in regulatory filings, it's in Federal Reserve reports, it's in the postmortems of every major banking outage from 2012 to 2024. The answer is that the financial system functions best when you trust it unconditionally. Questions create friction. Informed customers make different decisions. So the information exists, but it is never organized, never dramatized, never delivered to you at 9 p.m. when you're alone and thinking about your money. And now you've lived through a simulation of what a week-long payment failure looks like from the inside. Not the statistics, not the press release, not the services restored headline, but the $27, the borrowed cash, the hold music, the overdraft fees, the insurance lapse, the landlord email, the cold math of what you can and cannot defer. You have felt, in detail, the difference between money you have and money you can access. Those are not the same thing. They never were. Most people don't figure that out until it's too late. Right now, in 2026, you are operating in a financial environment where digital payment dependency is higher than it has ever been in history, where cash usage has declined by 42% over the last decade, where the average American carries less than $50 in physical currency, and where banking infrastructure is increasingly consolidated, meaning fewer institutions control more of the system, and a failure in one place can cascade faster and wider than ever before. This is not a prediction of doom. It is a description of the current conditions. What this means for you, specifically, practically, immediately, is that the gap between your current setup and a resilient setup is not large. It is one afternoon. It is the decision to open a second account at a different institution. It is the discipline of keeping $300 to $500 in cash, small bills, at home. It is the 20 minutes it takes to put your auto payments on a calendar rather than a permanent auto pull. It is knowing the names and networks of the two cards in your wallet and whether they share infrastructure. These are not emergency bunker strategies. They are the quiet, boring habits of people who have already learned from a story like this one or from their own experience that infrastructure fails, systems lag, and the moment between my card works and my card does not work is not measured in warning signs. It is measured in the 2 seconds it takes for a machine to say declined. The single thought I want you to carry out of this, the one that I hope keeps you up for just a few more minutes tonight, is this. Your money is safe, probably. Your access to your money is a different question entirely. And access is the only thing that matters when you are standing at a gas station at 7:14 a.m. with $27 in your wallet and a balance on your phone that you cannot touch. In the next video, I'll walk you through the exact structure of a two-bank, two-network, cash reserve system that takes one afternoon to set up and has protected people through every major payment outage in the last 15 years.